Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is an old friend of Future of Finance, Simon Chantry, who's co-founder and CIO at Bitt, whose digital currency management system underpins 5 CBDC and stablecoin deployments across no less than 3 continents. The latest deployment of Bitt DCMS is the eNaira, the CBDC, which the Central Bank of Nigeria launched on 25th of October last year. Simon, thanks for joining us.
Pleasure to be with you today, Dominic.
Now, as I just said, the eNaira went live in Nigeria on 25th of October. That was just 4 years after the central bank started looking for the first time at doing a CBDC back in 2017. Now, is this the real thing? Is this a real CBDC, or is it a pilot scheme for the real CBDC later on?
Yeah, thanks, Dominic, for the question. It's definitely an exciting one for us, getting to deploy in sort of the biggest economy in Africa. This is not a test, it's not a drill. There's already been substantial onboarding to the system. I think the approach that they've taken is it's certainly quick and it's a substantial approach where they're looking to target, as many users as possible, merchants throughout the country. The commercial banks, a large percentage of the commercial banks are onboarded and integrated. So no, it's not a drill. This is a real live CBDC deployment in the biggest economy in Africa.
Mm-hmm. Now, every country that, this is something we've learned from CBDCs that have been launched so far, every country that launches one has its own reasons for doing so. What do you think Nigeria's reasons were for launching a CBDC at this time?
Yeah, look, I think so. When you look at any particular CBDC deployment or a central bank, there are a series of influencing factors that are common to every central bank in the world, in my opinion, and then there's a series that are specific to their economy and financial system. And of course, every central bank is now sort of under a certain amount of technological pressure, having seen the development of cryptocurrency and decentralized finance over the last decade, and more specifically over the last few years. The market cap, the aggregated market cap of cryptocurrencies has now entered into the trillions, and you have decentralized finance and stablecoins doing billions and billions of dollars worth of trading and lending activity on a daily basis. Even the growth of US dollar stablecoins is substantial, and that can be considered a continuation or an extension of the US dollar around the world in sort of Web3 economies or DeFi economies. And so the Central Bank of Nigeria is no exception. Of course, that's a country with high crypto and Bitcoin usage. One survey that I saw was 32% of Nigerians have touched Bitcoin at some time in some transaction or another. So I think they have that consideration where they're saying, well, part of what has made cryptocurrency a success is the technological evolution that's sort of happened. What are the rails that crypto are riding on? These internet native payment rails is how I like to refer to them. And so that's one element of it, and it's one element that they can use to evolve their own currencies. And so that's sort of like an obvious international influencing factor. I think in a country like Nigeria, where you do have some inflation concerns and foreign exchange control concerns, they're looking for new tools to combat those risks and those scenarios as well. And so there's some, we're providing them with some of the capabilities, and certainly the eNaira solution, the DCMS, will evolve to address, at least as far as we can, some of those problems. And so we're basically augmenting their tool set to address some of the problems that they face. Looking, I guess, in some other categories, it also puts Nigeria on the stage to be able to collaborate with other international central banks. We see some collaboration being done, with Monetary Authority of Singapore, Hong Kong Monetary Authority, Bank of Canada, Bank of England. We're looking to, and certainly Central Bank of Nigeria will now be able to participate perhaps in some of the, cross-border, cross-currency swap and exchange experiments. And so really to put their financial technology a strong foot forward in financial technology, to be able to participate and be part of that discussion, be part of that evolution as we push central bank digital currencies forward.
Well, I'll come back to that cross-border point, but can I just press you on one of the things you mentioned there about Nigeria being a very large market for cryptocurrency? As you said, a third of Nigerians have touched the cryptocurrency in some way. I read a survey saying it was the sixth largest cryptocurrency market in the world. And there are real reasons, and we see this in other African countries, why Nigerian consumers might want to use cryptocurrencies, exchange controls and inflation being among them. We know the Nigerian government tried to prevent the Nigerian banks from supporting consumers trying to buy cryptocurrency. Is part of their thinking, and it's a slightly unfair question to put to you, but is the eNaira part of a government policy to suppress or reduce the use of cryptocurrencies in the country by providing an alternative?
That's a good question. Obviously I don't have full perspective on their policy goals or their, legislative goals. We are tech service providers, and like I mentioned, we're providing them with, an extensive tool set, an augmented tool set. That being said, we haven't heard any stated intentions for the eNaira to replace cryptocurrency. And I think anyone looking sort of under the hood would recognize that, the value proposition offered by decentralized digital currencies like Bitcoin and Ethereum and others is entirely different than digitized national currencies, digitized fiat currencies. And so I think, in the spirit of the technological tool set, Bitt has sort of designed our digital currency management system in order to be able to integrate with digital currencies from the perspective of a regulator or monetary authority. So for them to be able to achieve more comprehensive or effective regulation of digital currencies. And so that's a possibility. Now, they haven't, again, the central bank hasn't stated that they intend to do this. I'm just saying from Bitt's perspective, we recognize the innovation in cryptocurrency, and we've designed our system so that should a monetary authority wish to use it to more effectively regulate the digital currency space, that they would be able to. And there's a number of ways that you could imagine that CBDCs could be used to more effectively regulate digital currency trade. So having registered virtual asset service providers use a CBDC as the base trade pair would help enable better monitoring of inflows and outflows and whatnot. So there's some advanced monetary policy tool sets that could be realized by regulating the space, mandating use of CBDCs in elements of the space and whatnot. But we haven't had any indication from the Central Bank of Nigeria that they wish to do that just yet.
Can we talk a little bit about how this how the eNaira is going to be held, how it's going to be distributed? If I understand it correctly, the eNaira is a retail CBDC, by which I mean anybody in the country can hold it. Question is how they will do that. Is the central bank relying on the commercial banks to distribute this? In other words, to provide the customer-facing wallets, the apps on the mobile telephone, which people will use actually to hold this. I noticed, for example, you must have a bank verification number, which indicates you must have a bank account now before you can actually access the currency. Tell us a bit about how it's being distributed, who the primary distributors are, and how, if I was a Nigerian consumer, I could actually get hold of this. What do I need to have to hold it?
Yeah, absolutely. Yeah, so it started with the bank identification number, which does initially restrict to just bank account holders. The intention is to open that up to the very vibrant Nigerian financial technology ecosystem. And so, various payment service providers and other fintechs in the space will soon be able to also integrate and provide payment services to the general public. But right now, yes, it is linked to the commercial banks, the current registered commercial banks. We're really excited for being able to move to that next step and open up the APIs, open up access to more fintechs. Again, Nigeria has a thriving financial technology ecosystem, and I think part of the effort here is to sort of provide a common platform so that users can transact across all of the different apps in the country, with the eNaira being the sort of cheapest, fastest, most secure network rail, so that you can so you can transact across platforms, across applications, across institutions. So that's the ultimate goal. We have to start somewhere. It's an iterative process. There's plenty of integrations to be had. You picture the challenge that Bitt has when we enter a new economy or financial system, we effectively have to analyze the integrations that are required to make the CBDC as desirable and functional as possible. And so we're looking at core banking system integrations and integrations, SMS and any other integrations where we see that there's healthy transaction activity, or there may be healthy transaction activity. We need to make sure that we're fulfilling those requirements. And so it's good for us. Our feature set continues to grow. Our functionality continues to grow. But as we roll out country to country, it is an iterative process. And so, yeah, again, we're really looking forward to opening it up further to more players within the Nigerian financial ecosystem and beyond.
Now, there are also caps, I believe, on how much of the eNaira any individual consumer can hold. It's 20,000 naira, I thought, for most people, like $50, and nobody can use it to make a payment of more than 200,000 naira. That's less than $500. What's the logic of those caps? Because one of the concerns that's been expressed about CBDCs generally is it kind of strips commercial banks of their funding base, but given that the banks are the main distributors of this, and you have to have a bank account to get hold of it, maybe that wasn't a concern. So what's the purpose of these caps on how much you can hold and how much you can pay in eNaira?
Yeah, it's a good question. Again, it's one that's, this is one that's not really at our discretion. So, when we listen to the central bank's requirements, and our digital currency management system is able to effectively configure those either balance limits, transaction limits, holding limits. So we've listened to their requirements. As far as the intentions, again, I would sort of kick this back to the fact that it's an iterative process. And obviously the CBN has heavily researched CBDCs and all the research that's come out over the past few years. And so I think those are levers that are still sort of being tweaked to sort of understand what optimal limits really are. And obviously, there are AML compliance considerations, but as you mentioned, there's the bank funding consideration as well. This is a new asset. It's a central bank. It's an extension of central bank money. And so I think the research has said that limits, are a good tool to use to just encourage payment and not sort of hoarding and savings in CBDCs, which again is sort of where the bulk of that risk lies for affecting bank funding in a negative way. So yeah, again, I don't have full insight into their decision-making process. That would be more of a question for the Central Bank of Nigeria. But of course, we will work with them, and we can implement those limits, in multiple ways as they are configurable with our system.
I guess an interesting test will be the next iteration when it's opened up to non-bank payment service providers as well. Mm-hmm. Now, another question is privacy. What and I guess you could configure your system to accommodate this as well. What guarantees is the central bank in Nigeria offering to consumers about the privacy of their transactions? As far as I could tell, the central bank can see every transaction if it wants to. And will Nigerians not be concerned about the central bank being able to see what they're up to? Are there any guarantees that can be offered to consumers about, well, there will be a degree of privacy if you use this eNaira?
Yeah, it's a great point. It's basically reflecting the current what we're seeing more broadly, and I think it will be sort of the de facto way that CBDCs are rolled out, where the payment service providers, so the entities that are effectively providing the wallets to the end users, they still collect the KYC, much like commercial banks collect KYC information on all their account holders, in the current system. And then if the regulator needs to identify any particular individual, then they would need to go to the corresponding wallet service provider. So whichever wallet service provider is servicing an individual, they would need to actually go through that payment service provider or commercial bank in order to identify the individual and then look into their transaction history. There has been some discussion around a base tier wallet that is completely anonymous. So that's an interesting use case that we're sort of scoping and investigating and trying to determine the viability for rolling that out. I haven't seen any specific privacy guarantees. Again, that's a little out of our wheelhouse. Although I like personally and Bitt are sort of in extensive discussions worldwide about sort of privacy and accountability standards being set. We're looking towards bodies like G20, for guidance on this, and I think it's something that's being demanded internationally, is to say who's setting standards for privacy and accountability, and how can we be sure that we're meeting those standards provably. So it's definitely something that's top of mind for both central banks and tech service providers like Bitt worldwide. But right now it basically mimics the current system.
Just on one point of detail, which I think reinforces the point you were making earlier about the Central Bank of Nigeria wanting to encourage people to use this to make payments, but not to hold their savings in. I'm right to say that the eNaira doesn't pay interest. Is that right?
That's right. That's right. Yeah. Now again, that's a configurable component. So it's like when I talk about an augmented monetary policy toolset, the Bitt DCMS enables configurable interest rates. But what we've seen off the sort of for all the initial launches is that central banks are setting the interest rate at zero.
Okay. And now what about the merchants, the shopkeepers, the service providers? How are they able to accept eNaira, and have you been able to gauge how enthusiastic they are about this? We just talked a minute ago about this payment limit of 200,000 naira, and I assume they face the same caps on holdings and payments as retail consumers do. Is it too soon to say that merchants are falling over themselves to accept eNaira in payment, or is it? I don't know how difficult it is to roll these things out across all the various payment channels, but presumably it takes time. What's your sense of how merchants are reacting to the introduction of the eNaira?
Yeah, I don't have the figures on hand, and apologies for that. I guess the goal is when we think about what would incentivize merchants to accept CBDCs, it's kind of like the instant settlement element, where merchants typically wait, a period of time to receive settlement if they accept, for example, credit card payments. And so this is an alternative digital payment rail where you have instant settlement, so you can turn around and use that balance to pay your vendors or pay your staff or whatever other expenses you might have. And so I think if I look at where the opportunities are, and by the way, the transaction and holding limits for merchants, I believe, are different than what's been published. And again, something that I'll have to verify, but they are configurable in and of themselves, because as you can imagine, when you onboard to a merchant app, you provide a business registration, so you can have sort of different transaction holding limits. I know that. Okay, so first of all, merchants would be using a point of sale application like specific to, or rather that can be loaded on any smartphone or tablet. They also have the opportunity to use e-commerce and for payments to sort of be aggregated to the same account, so that they can accept payments online for goods and services and in person. So I think, yeah, so having instant settlement, sort of reducing the cost of cash management, getting them onboarded to e-commerce, right? These are some of the sort of factors that we think will encourage merchants into the ecosystem. Also, having USSD payments, it's one of the features on our roadmap that we're looking to integrate probably by Q2, I would think. Yeah, there's a number of factors that will encourage merchant adoption. I do not have the figures on me right now, though. Apologies, Dominic.
The point is they don't have to invest in a lot of new equipment. They can use existing point of sale devices, telephones, internet, etc.
That's right. Yeah, that's right. It's meant to be a low barrier to entry for merchants, which is why we've shied away from any custom hardware or anything like that. Yeah.
They can also still continue to accept cash. One of the interesting things is that the Naira is going to coexist alongside the eNaira, the two being pegged one-to-one. So we're going to have a cash Naira and a sort of eNaira coexisting for quite a long time. Do you expect that to be permanent? What does it tell us about what other countries might do? Is cash something which we're never going to get rid of? Is it important to a large enough segment of the population to want to preserve it?
I think it is. Yeah, it's something that's unique country by country. Like when you look at the Nordic countries, they have sort of naturally trended away from cash. But whereas in Nigeria, cash is still in heavy usage. And so I think it's ultimately about giving consumers the option, giving consumers, businesses, enterprises, the government, giving them the option on which rails do they wish to transact on. We don't see a stated intent to eliminate cash. So I think it's just providing more optionality and again, more powerful digital financial services that are sort of, I like to say digital financial services as a public good, or digital financial network as a public good, that will live alongside cash.
You mentioned a minute ago that keeping the barriers to entry low for merchants was important. It seems that the barrier to entry for consumers is quite low as well. I was quite surprised at how little was required of you to open a wallet. It was just your name, your place and date of birth, your phone number, your passport photograph, email address, and basically a password, and off you go. You've got a wallet and can start using eNaira. Do you think that other countries will want to keep that barrier to adoption as low as that? I mean, it seems to me to have considerable scope for illicit wallet opening, if you like, and transactions to follow from that. Or am I misunderstanding it?
No, you're right. That's always a risk. It's always a consideration, because I guess it effectively boils down to identity fraud, right?
Yes,
if
that's what I mean. You put it much more concisely than me. Yeah.
Yeah, if you're able to spoof an identity, or you've stolen an identity, you would have the ability to create accounts. I think it would be an unwise system to use it on. Again, given that, given the sort of AML compliance functionality that is in place, and the fact that as you register, like you are registering with an entity, and transactions can be investigated in the event of if there's legal justification to do so. So I guess if there are downstream fraudulent transactions, then they'll get flagged just like transactions in the current system, right? And so they'll be reported on and investigated and whatnot. So I don't think it would be, I certainly don't think it would be the wisest network for criminals to be transacting on, but it is a risk. It certainly is a risk. And like one of the elements that goes hand in hand, and we see sort of our chief architect, our chief technology officer sees as being a potential solution here, is self-sovereign digital identity. And yet there are a host of sort of complications and a large process for populations to go through in order to get effectively registered and to start utilizing and get educated on how to utilize a self-sovereign digital identity. And yet that really would solve quite a few of these problems when it comes to KYC verification, privacy, data security, data collection, accountability for those who have access to data. So it's one of those things that we are focusing on as sort of a way to streamline onboarding and minimize any honeypots and minimize the unnecessary divulgence of KYC and identity information. So sort of stay tuned on that, and we're sort of trying to push that as far as we can, given the position that we're seated in as a firm. But I do think it will be inevitable that we'll see sort of more robust digital identities programs that will sort of, again, be another tool to mitigate the risk of identity fraud and multiple accounts and using accounts for nefarious purposes.
Let's hope so. Digital identities certainly seem to solve a lot of problems in identification. Talking of which, self-sovereign identities, now corporates could get these as well. My understanding is, though, that corporates using the eNaira do undergo a full KYC, AML, CFT, and sanction screening test process before they can start to use it. Now, are those tests being run by the banks? This is a broad question about CBDCs, because we kind of expect banks to carry on doing whatever we think about how pointless or pointful these tests are. We kind of expect banks to do them. Is that what's happening in Nigeria? Are the banks running the KYC, AML, the customer due diligence tests on corporates? Right. They are, right?
Yeah, and that's where I mentioned, like, it basically mimics the current system where banks have the option to offer, retail consumer accounts, and then they also can offer business accounts. It's the same deal with the CBDC structure. Yeah.
And once you've got your wallet, how secure is it? You mentioned a minute ago it wouldn't be very sensible to use the eNaira network if you were a criminal, but do we have any evidence yet of how secure the wallets are proving? Are they being hacked and attacked by fraudsters and taken out by fraudsters or not?
Yeah, we haven't seen, I mean, there have been no reports of that thus far. Again, but again, as sort of a technology service provider, we don't have that intimate of data. So I'm just thinking like, of the different meetings we've been a part of and risk management and that sort of thing. It hasn't been, well, it hasn't bubbled up to sort of our level yet as like requiring additional sort of technological efforts or additional services from our side. So I think we stand behind the structure that we have. I mean, and again, this is sort of where borrowing elements from the crypto innovation over the last decade. If you're effectively deploying public-private key infrastructure and following sort of password protection, two-factor authentication, it's a robust and secure system. Inclusive of the sort of more architecture-specific and deployment security considerations. Without even getting to those, we offer full best practices for safeguarding accounts and whatnot. So that hasn't been a stated concern at our level just yet. The system has been robust and secure from the outset.
There were some gripes in the early days that people were struggling to open their digital wallets, even if they had their bank verification or identification number. Have those settled down now? And do you have any sense of what was causing them?
Yeah, anytime we do a new integration with like a national identity system like that, it's effectively what that is, a BIN. There's always, it's like any issues that they may have been experiencing, for the duration of operation of that system, then we get to experience them again as we integrate with the system, right? And so it's there's always going to be some of those sort of hiccups, and we try and take care of as many of those in testing as possible. But yeah, as you launch, it's and there was quite an influx of users initially, and so it caused a bit of a bottleneck there. But I think we're through and sort of smooth sailing now.
Mm-hmm. What about remittances? Is the eNaira good news for Nigerians who are sending and receiving remittances?
So those integrations haven't taken place yet, but it definitely is on the roadmap. So yeah, I think sort of coming later in the year, you're going to see onboarding of IMTOs for remittance and some more strategic integrations that will enable lower cost remittances. So that's one of the stated goals of the Central Bank of Nigeria, is to improve settlement times for remittance and drive down costs of remittances. So we're definitely looking forward. We're not there yet, but we're moving forward towards those integrations later this year.
And have we seen any innovations by banks, or third parties aren't yet allowed to use this, but are we seeing, as you mentioned, Nigeria has quite a thriving fintech sector. Are we seeing those fintechs starting to respond to this opportunity by creating new apps for consumers and corporates to use, or is it too soon to point to things like that?
Still too soon. Let's definitely stay in touch, and I can update you as we get, because I suspect there are going to be plenty of integrations. Of course, we've been in talks with some of the the quick moving fintechs, like Flutterwave as an example. I think that there's plenty of talent, plenty of ideas within Nigeria for them to be iterating on and evolving use cases. So I'm really excited to see what comes out of that. And again, I think this year is going to be a busy one for that sort of innovation.
Mm-hmm. And as we prepare to think about those innovations, can you tell us a bit about the technology choices which are underpinning the eNaira? Obviously, your own DCMS system underpins the CBDC itself, but in terms of people who want to create apps to interact with it, what can you tell us about the underlying blockchain protocol or platform and the APIs they'll be able to use to access this? Is this going to be very complicated or very simple, or how do they go? How will those innovators go about creating those new services, those new apps for consumers and corporates to use technologically?
Mm-hmm, mm-hmm. Yeah, this is where I think, so if you think about where the industry's headed for CBDCs and stablecoins, you have sort of configurable currency and configurable payments, or automated, yeah, I guess that's how you could say it, programmable currency versus programmable payments, sorry. And so programmable currency on the one hand would be feature sets that the central bank will sort of maintain control over, and that will be things like, the interest rate in the system, the account limits, and perhaps limitations, currency level programmability. And then at the payment side, you have programmable payments, which are things like automated payments or conditional payments or batch payments. And that sort of functionality will be available to end users in due time. So you can picture the amount of use cases, especially when you can send very small fractions of currency. So you're opening up opportunities for micropayments use cases. You're opening up all kinds of automated payment opportunities. And again, the batch payments functionality, that's just sort of what I would consider to be the most common programmable payments use cases. So I think that functionality in and of itself will open up a ton of different use cases that can be fulfilled by payment service providers or even the commercial banks. And so we expect to see those niches filled by fintechs in the region. And so that's what you can look forward to, sort of base level programmability. I think, when you talk about cross currency or cross asset, we get into payment versus payment and delivery versus payment. This is an interesting one where I don't want to say it would be a blend of the two, but it's certainly a more complex integration. And it's an integration that we're really looking forward to, because of course, that's where you get to realize a lot of the benefits of atomic transactions, atomic swaps, atomic exchange, where if something is coming in on from another network, or a payment hits a certain address on one network, well, then an automated payment can be sent on another network. And so that sort of functionality, instant settlement, will open up, again, another quite a few categories of use cases and multiples of use cases within those. So I guess when we talk about functionality and the way that the digital currency management system is evolving in the underlying transaction network, that's sort of a summary of how I see. And as you can imagine, it's going to keep us busy for years to come as we start to test each of those use cases, configure it, program it, and deploy it. It's there's quite a lot to accomplish.
Well, one of those use cases will be the cross-border payments, but I'll come back to that in a minute, because I think it has general application in this area. But just looking at the eNaira from the point of view of the central bank itself, I think a lot of the central banks who watch this interview will be interested in the answer to this question. The eNaira is obviously a central bank liability, it's central bank money. How big an issue was it for them? How big a concern was it for them about cybersecurity, for one thing? How do you prevent people hacking into this central bank liability? And secondly, operational resilience. It's kind of, this stuff has to be available, it has to work. There's no question you can't let the central bank money system lie down for a day while it recovers. How big were those two issues, cybersecurity and operational resilience?
Yeah, absolutely. They're massive. It's and they have also third-party sort of security service providers sort of constantly doing testing of the system. So it's something that obviously is a huge focus at Bitt. But also, as central banks sort of roll out these systems, again, it's not like there are multiple parties, there are multiple firms that sort of come together and to collaborate to bring the system to market, to continue to roll out and operate it, and to ensure its uptime and security. So it's a huge concern, a lot of attention given to it. And it is certainly a collaborative effort between the technologists at Bitt and the full-time operations support staff, as well as third-party security penetration testing and other sort of firms that are constantly verifying the integrity and security of the system.
Now, I took the trouble to look at how the Central Bank of Nigeria and the Nigerian government presented the CBDC in the first place, and they came up with quite a long list of good reasons for launching a CBDC. And I'll just rehearse them to you, because I think they'll be of interest to people watching. Because they thought it would enhance their tax capture, their tax collection. They thought it would reduce financial crime through traceability. We've touched on that already. They thought it would shrink the size of the black market economy, which is very substantial in Nigeria. They thought it would lower transaction costs. It would eventually, obviously not in its first iteration, which was bank dominated, but it would eventually increase financial inclusion, reach the unbanked, at some point. It would enable them to make welfare payments. It would make it easier for them to implement their monetary policy decisions. It would even moderate the devaluation of the currency. It would enable them to help curb inflation. And of course, it would bring the official and the black market exchange rates back into alignment. Now, I don't expect you to comment on all of those, but I'm wondering what in your view, the chief lessons of the Nigerian experience in terms of the design and delivery of the eNaira are for other countries that are looking at launching a CBDC. They don't, should they look at this laundry list of benefits, or should they be, from your point of view, focusing much more on narrow questions of design, how to make this work in your market with your needs and your budgets?
Look, it's a good question. It's also, I think like my first reaction to that is that these things don't happen overnight. These are long projects. I think you think of sort of the most successful payment services, sort of since the launch of, I guess, what you would consider Web 2. These rails took years and years to actually get a user base, get substantial transaction volume, fulfill valuable use cases for retail consumers, enterprises, and more. So the initiation of these CBDC pilots is just that. It's the initiation, bringing them to market, getting the central bank to wrap their head around a new set of responsibilities and their new tool set and how they will use the tool set. But ultimately, a lot of the benefits can't actually be realized until you have substantial adoption, and adoption takes time. There's no quick fix for adoption. Obviously, we're doing everything we can to help on the technological side, which is, a lot of it has to do with interoperability and a rich feature set, which again, our digital currency management system is constantly growing in features and the ability to efficiently and securely integrate with complementary systems in the existing financial system, whether it be on the network side or application side. So yeah, I hate to sort of, downplay the activity, but it really is just the start of a journey. Right? It's the start of a journey, launching a new payment rail into the public domain, encouraging firms to build on top of that network and to provide value to the general public, to provide value to enterprises and any other stakeholders who would be transacting on it. Even crypto took 12 years to sort of hit where we are today. It's been, you could argue Bitcoin's been around for 12 years and it took sort of that long to get to where we are today, where you have the sort of usage that's made it sort of a real splash in international markets. So I would just say it's a work in progress. It is a journey. Nothing happens overnight, and there are a lot of specifics for each country considering rolling out a CBDC in their own jurisdiction. Again, I think when you think about it broadly, it's effectively evolving the technology behind a national currency, and whether that's done by the central banks or it's done by commercial banks, I just see that as a trend that's going to continue to the point where we will get the sort of currency to currency integrations that offer the efficiency gains and the settlement time reductions and the cost reductions that you would expect out of a competitive international monetary system. So that's sort of how we see it, and the digital currency management system is looking to fulfill those objectives to enable that interoperability, to enable the cost reduction and the efficiency and security.
Now, of course, Bitt is on a journey along with the central banks. This is your second CBDC to go live after the Eastern Caribbean Central Bank launched last year as well. What do you know now that you didn't know before you went live with your first CBDC early last year?
That's a good question. What do I know now that I didn't know? I guess, yeah, it's a reminder every time we enter into a new country. So we are across three continents now. We have stablecoin deployment in Belize, and we have an upcoming deployment in Eastern Europe as well, as well as our own digital currency deployment in Barbados. So that's inclusive of the Eastern Caribbean Central Bank in Nigeria. Each country really does have a unique set of objectives that they're looking to achieve. So it's been fascinating to learn about each country's objectives. And so you can picture our challenge is to consume those objectives, internalize, understand them as a company, understand them as technologists, and then factor and try and build feature sets that are common to as many central banks as possible, and to enable the configurability of the solution for these central banks. So I guess I would say that that's what we are learning. We've been deep in the research building for sort of the past 5-6 years. And yet, as we start to bring these things to market, you start to get validation from elements of the research and say, oh, this is in line with what we've read from the Bank for International Settlements or the Bank of England or Banque de France. Plenty of quality, like lots of quality research has come out over the last 5-6 years that's guided some of our initial development and deployment of our product. And yet, as you work directly with central banks, you start to understand how they work. Also, I guess one of the things is we've recognized just how big these projects are, and that it's, I think I mentioned it earlier, where it's not just about Bitt and the central bank bringing something to market. There are all kinds of other entities and efforts that are required to be managed. So you can think about organizational change management, think about project management. The augmented responsibility of the central banks really demands a lot. And so we've seen more firms come to the table, whether it's system integrators or assurance, other professional service providers come to the table to assist in the go-to-market strategy and the ongoing operation of these systems. And so I guess that's one of the things that we've learned, is that large projects, and they require multi-talented stakeholder groups to be able to effectively launch them and operate them in market.
Mm-hmm. Now, you mentioned Belize and Ukraine. You brought them up. Can you tell us a bit about what you're doing there?
For sure. Yeah, these are, so in Belize, we are working with the National Bank of Belize on a digital Belize dollar. That's sort of a regulated stablecoin project. So very excited about that. In the Ukraine, we are working with Tascom Bank to effectively continue the National Bank of Ukraine's eHryvnia CBDC pilot project. So it's sort of, again, an affiliated stablecoin, as in it's affiliated with the central bank, but it'll be a regulated stablecoin project to continue the testing of an eHryvnia. So we're really excited about that one. And for that one, that's an interesting one for us, where we've integrated with the Stellar network. Stellar the Stellar Development Foundation have been sort of, and the development community surrounding the Stellar protocol have been evolving that protocol to meet some of the needs of a monetary authority. So that's been a unique one for us to work with. Because it's the first sort of open, decentralized network that we're able to build on. And Ukraine has some very unique goals that sort of stretch beyond what some other central banks have stated so far. And that's like, and so, yeah, I think we'll see more integration and interoperability with decentralized finance and maybe some of the crypto economy that's there, exchanges and OTC desks and whatnot. But they also have some really interesting payment use cases that they're looking to achieve. So public servant salaries and batch payments, automated payments. So that's a really exciting one for us as well.
Hmm. Now, something you've brought up more than once in this conversation is the idea of networks, of atomic settlement, of currency to currency integration. And I'm wondering what your view is of how CBDCs could contribute to something which has become quite a high profile topic, which is reducing the cost of cross-border payments. At the moment, the cross-border payments are made mainly between correspondent banks with access to local real-time gross settlement systems operated by central banks. Do you think, and the Bank for International Settlements has kind of floated this idea, do you think that there will be, to your point about currency to currency integration, links between CBDC networks, and could they replace this current combination of correspondent banks and RTGS systems as the lowest cost means of making cross-border, cross-currency payments?
Yeah, I do think that that's where the future is headed. It's certainly one of the sort of big, sort of one of the bigger goals and I guess sort of advanced functionality that's offered by these networks is the ability for them to talk directly to each other via smart contracts. There's a host of considerations that need to be sort of factored in integrating that, and there's still some involvement by the central banks. You think about, okay, so you have two CBDC networks that talk to one another for exchange. Well, they need to be pulling like pricing data from somewhere, and then that price data needs to be implemented and agreed to by the two counterparty central banks, or if there are forex traders in there as well. So it's you know, there's elements that need to be defined there by participants. But I do think that that's where we're headed. Again, just because efficiency gains, reduce settlement times, reduce cost, and the fact that you can securely execute a transaction like that, I think, yeah, we're definitely headed there. So, you know, we might see a future where central banks agree to a specific price oracle for their currencies, and perhaps as long as they're keeping that pricing oracle live in a certain format, that, you know, transactions would be able to be executed network to network, provided liquidity pools were sufficient and at certain levels, right? So that's sort of where I see it heading. You know, I don't think you're going to see full automation for years to come, but these are use cases that we're looking at very closely and collaborating with some players who are already proving out, you know, specific scenarios. Because, you know, again, I think that's where we're headed more broadly, is the short answer.
If those central banks were pricing those cross-currency transactions, those cross-currency payments using an oracle, something has to feed that oracle, and those prices that feed the oracle have to come from somewhere, and presumably from an active foreign exchange market. You don't worry that if central banks, CBDCs, take over the cross-currency payments business, that there simply wouldn't be enough going on in the foreign exchange markets to create the prices to feed the oracle. In other words, you continue to believe the FX market, roughly as it looks today, will continue to exist alongside an inter-CBDC cross-currency payment system. Is that a reasonable supposition, reasonable interpretation of what you're saying?
Yeah, exactly.
Right. A last question for you. It's interesting to a lot of observers that the real experiments taking place, and live experiments taking place in CBDC, have tended to be in the sort of markets you're serving in developing economies. China's obviously an exception for reasons of its own. But do you think, as you look, I don't know how far ahead you want to look, maybe 3, 5, even 10 years, do you expect CBDCs to continue to be a tool used mainly by developing economies? I saw, for example, the other day that in the House of Lords in the United Kingdom has come out saying, well, there's no need for a sterling CBDC for the foreseeable future. We just don't need it. Do you think CBDCs are going to offer advantages mainly to developing economies, or do you expect to see them being adopted by developed major economies? I'm talking here of the euro, the dollar, and indeed sterling.
Mm-hmm. That's a great question. You know, right now it seems like all eyes are on the Fed, who are due to release their paper on a potential digital US dollar CBDC. I think that the developing nations definitely have opportunities to evolve their payment system maybe in a faster manner, and they're looking for ways to perhaps attract investment, encourage economic activity, and sort of attract. It's about talent and capital and attracting that, and showing that they have progressive stance on how to leverage technology and the technological evolution of that's happened over the last decade in digital finance. So I think it's an interesting trend, definitely, that outside of China you're seeing the developing nations move towards this. I would say, look, the developed nations have also been experimenting in their own right, and some of them have just left it to the private sector to experiment. You could argue that, the 150 billion plus that's behind U.S. dollar stablecoins now could be considered an experiment of a U.S. dollar CBDC, even though, of course, the boundaries and the restrictions and use cases may not be the most desirable from the Federal Reserve's perspective, but yes, from a technology perspective, it's you could consider it an experiment of just like digitizing and extending the US dollar. So I guess what I'm saying is these experiments are taking place with the major currencies, sort of in the private sector, and whether or not we see their central banks move towards it, it may be one of those cases where as one does it, then it sort of forces the next one to do it, and so on and so forth. So I'm really curious. Like we're just sort of watching to see how who's going to move forward. We're seeing some good work out of the Digital Euro Association, Digital Pound Foundation, the Digital Dollar Working Group, and others in the U.S. So we're just going to keep close to those updates and see. And again, I would really like to see what's happening. The Federal Reserve, we're waiting for that paper. I think it was due to come out at the end of last year. So really excited to see what they release.
Simon, one last question for you. It's interesting looking at what's happening in the world of CBDCs, and particularly the type of clients that you are working with, that it's the developing economies, the developing nations, which are pioneering the use of CBDCs for real. China is obviously an exception, but do you think that pattern is going to persist as you look 5, 7, 10 years ahead, or can we look forward to a dollar or euro or sterling CBDC sometime soon?
Mm-hmm. Yeah, it's a good question. I think when we think of the definition of developing economies, it's right in the name. I think they have more incentive to continue developing, to experiment, to evolve elements of their financial system and increase, do whatever they can to increase trade and attack talent, attack capital to their countries. So I think this is why you're seeing them take more proactive approaches, is because they are by definition developing, and they're looking to expand economic activity in their borders and arguably beyond. That being said, I think you could consider that there has been rather development behind the major currencies. You could say like the over 150 billion US dollars behind the existing stable coins is effectively an experiment of a digitized US dollar, even though the use cases and the governance associated with it is not how the Federal Reserve would implement a digital US dollar. But you could argue that there's sort of private sector development of the major currencies, certainly the US dollar, and we've seen some initiatives for digital euros through the Digital Euro Association, the Digital Pound Foundation, and some of the Digital Dollar Working Group in the US and Project Hamilton and some other groups in the US. So I think it's being done differently and more carefully in the G20 because they don't have as much of an incentive to continue to innovate at a rapid pace like developing economies do. So moving forward, I think as use cases get validated and as countries move to digitize their currency and start to realize the benefits that, again, I mentioned, we've sort of covered them extensively throughout the interview of, interconnection, interoperability, getting right down to atomic swap and atomic exchanges. I think as countries start to realize those sort of larger goals, then you'll see the majors start to do the same. I just think that they are sort of following, a pace that they're more used to, and also leaving it to academia and the private sector to experiment so that they can learn and then sort of move forward at their own pace.
Simon Chantry, thanks very much for taking the time to talk to us.
Thank you, Dominic. Always a pleasure to be with you.